we have been in a window of weakness that has a lot of retail expectation. What I mean by that is, everyone has this major narrative about crazy volatility entering the market for us to take advantage of. I personally never traded a big time election. However, you have a ton of expectations in terms of, oh yeah, the market's going to go risk on, or you're going to get a crazy energy rotation. You're going to get this, you're going to get that, and it's all aligning with a beautiful time of a window of weakness right underneath the external, right? So whenever you have a window of weakness like this and you start to see in the daily chart, like I already covered before in the previous videos, how the each and every single higher high are leading to failures essentially, right? Strong structure and a break of a new high and a higher low beneath you, and then a break of the new high, and then a higher low on top of that for an aggressive higher low and more of a shallow retracement would mean that there's a bid that's playing a little bit more aggressively. Things are moving up, things are moving a little bit more strongly in a constructive way. We have just been getting this slowing sign of progression where each and every new higher high is being sold and every new higher low has a relatively low volume behind it, relatively low volume, low candle spread behind it, and you're getting these weaker higher low by higher lows and these weak higher highs by higher highs, right? So it's almost like a upward sloping distribution, right? Because a distribution can happen in so many different ways, guys. It could happen through an uptrend. It could happen through technically a chop phase after a downtrend, which could be a redistribution. It can happen in any way. A distribution can look like this. A distribution can look something like this. Higher highs, sold, 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 and then liquidation, change of character, break. Distribution can look like this, where you might not think it's distribution, right? It might trick you out, and you might see this major chop fest. Well, I already kind of covered that over here, right? But there's so many different ways that a distribution can look. And I just feel like a lot of people weren't really looking at what the market was doing over here in this current time. Whenever we have these gaps towards these all-time highs that are left unfilled, you're getting tech in so many all-time high failures, right? I mean, this is your all-time high failure previously. You build up a lot of liquidity off of this range. So we would essentially have to say to ourselves here, guys, if this doesn't break base with strength and go for that all-time high, then this is not a strong constructive setup, right? There's just going to be a seller removed off of this spot, right? We had a little mini gap here previously from Apple, so you always want to take a careful look at what the equity market's kind of doing. And then we got our higher low off of basically the progression off of this gap that we actually claimed through, broke, and then try to continue our way higher. It's a gap from 224 down to 229.50. And then this is whenever we broke above, never had a true strong retest. We actually had a little bit of a slippage beneath. That was just more into the internal breakout level, like I said, off of the gap area down here. And we got, like I said, higher lows for breakouts on this blow off top narrative on really low volumes. So even if you don't understand the OPEX windows, the window of weakness, Vanna and Charm not taking effect into the market, then you can just look at the simple volume price analysis and the simple effort versus result and basically understand that there's going to need to be a lot of effort and a lot of imbalance of demand that's sitting within the market in these general areas. We don't have any binary event. We don't have anything like that to push liquidity up into this area for obviously shorts to get squeezed, for anything to happen that's a little bit more of something in an environment that will favor volatility. We don't have anything like that. We're awaiting probably the biggest week that we ever have in financial markets ever, for the S&P, for the QQQ, for all of the equity market, for all of tech, for all of banks, energy, everything. This is a massive, massive, massive week, right? And there's so many people with expectations, and the market is in the most uncertain week ever right now. We have FOMC and the elections next week. So if you tie those two in together, guys, you're gonna kind of be able to understand that, things are gonna chop around, especially within a window of weakness. So, with that being said, that's what ties into the earnings reports. The earnings reports for tech were pretty, like, I don't really want to dive too deep into like the financials or anything like that. However, the charts have just been really hinting to me that this is definitely a larger sign of distribution happening, and Microsoft has been in a low liquid state when you go to the daily chart. So all the earnings report really is here, guys, would just be enough liquidity to be able to unload uh, counterparty wise, right? So what I mean by that would be, all right, yeah, we're chopping around, chopping around, chopping around. This has no structure. This has no nothing. If the report isn't really, really, really impressive, this thing's gonna mark down, right? It's gonna mark down. The QQQ needs to mark down with it. It just makes sense for the market to mark down. Market blow off tops don't happen whenever you don't have enough liquidity on hand and they keep selling the new highs, right? And not really purchasing the new lows with any true strong bid. And then you have a lot of liquidity down here with orders to be filled from the buy side. You have a dark pool print all the way down into 471.32-ish. You have a signature print sitting over here at 482. The market's likely going to draw to those current areas given the upper end of the chart and the upper end of the extremes on the QQQ has been seller dominant, and in the lower ends, meaning the higher lows that have been trying to hold price, trying to hold the gap as a progressive state, have been on no volume, right? This has all been seller dominant volume, followed by a seller kind of backing off, and then obviously we get a quick, clean little move higher, and that move higher is just sold off once again, right? So we had that final leg higher, basically to take out the previous high, right? And this is whenever we kind of had our UTAD look. If you take a look at the previous external, and then you had so much structural like buildup in here where it kind of looked distributive. However, we held this little area, which is the gap from over here to a T, right? So they were trying to throw in a higher low here. They did successfully do that. Like I said, though, whenever you're looking at these higher lows on really low volume, and then it continues its way higher to then a shooting star looking candle, followed by kind of consolidation into those reports. And I'm expecting the reports to not really break us out really much at all. And you got to just dial in on the chart, dial in on the laws of supply and demand, the dynamics around supply and demand, understand the window of weakness, tie that in with the earnings reports, and then you can say to yourself, okay, yeah, these charts are not going to push the market in general from an index perspective higher. Maybe it will push Amazon higher. Maybe Amazon's ready to go. But I'm just saying a lot of these things have nothing to do with, um, you know, the report, the financials. About if they want to mark it down, they want to mark it down. It could be the best report we've ever seen. So that's whenever I was short QQQ. I was short over here, and if you go into an intraday perspective of this, guys, you guys got to remember each and every new higher high from a hourly perspective has been getting sold. We had a little shakeout down here, followed by obviously a reclaim of the range, and then this is whenever we kind of marked up into data. And then whenever I got short, it was actually over here. Whenever we gapped down and we had our reports coming, we had our previous high, we had a lot of volume coming in on the sell. The volume really dried up on a retest back into this area. If you go into the extended, we have a clear swing high. Okay, so this markdown's making a lot of sense right now because we consolidated through the pre-market session, right? And we had relatively low volume run up yesterday with almost as it looks, as you guys can see, very little consolidation. We could basically conclude to ourselves that this day of trading action was basically just a day where a seller was moving up the ask and playing a little bit more passively and waiting to distribute and basically like waiting on prey, it's almost like. So whenever you're going into your smaller time frame now, you're looking at the big sell off the open. You're looking at some of these other charts. If you go into the Wednesday trading action, you had some ugly looks over here in Apple. Apple was basically breaking the trend into the report. You had the swing low, swing high. Keep in mind, you still have a bull gap fill beneath you. Same general concept that I talk about with QQQ. This is also why I took an Apple flush trade over here, because we did just fill the entirety of this bull gap that has been needed to get filled. This was a bull gap trap. So what I mean by that is everyone's so baited down here by this breakdown candle. It reclaims the range, squeezes higher. And then obviously that left behind a range of liquidity that needs to be tested, which would be the bottom of the gap print down here, right at 220.69. You go over to something like QQQ, same general thing with these gaps left behind. But yeah, you go back to the Wednesday trading action, and a lot of these things didn't really look too great. I mean, NVIDIA was decent, still was failing the previous all-time high. You had NVDS slowly catching a bid throughout that given day. This was Apple's day over here on Wednesday, where it was trying to crack this upper trend line, and we still had these little mini gaps beneath us. I figured, things are going to get driven down into these areas that need to be filled on the charts. You had some other ones like Microsoft starting to get creep up into like this area over here, which was like a little gap up, followed by obviously a sell and a failure of the level, and this level has been historically respected for a very long time. So I just figured sizing in on Wednesday had enough momentum in the overall market for me to get a little bit of leeway on the short, see what it could do into the after hours, and if it can hold into the after hours, I have 15 minutes to close before I get into the next day. And I was like, you know what, I'm going to hold a little bit of this. Next following day, we gap down, we open, we capitulate, we slice completely right through that gap. This is whenever you start getting, keep in mind guys, a window weakness. This doesn't necessarily mean we're going to get into a violent markdown of distribution. I never said anything about this happening where, we're going to get war and we're going to get, okay, yeah, we're marking down and it's going to go boom, boom, boom. I never said shit like this is going to happen. You have to take it candle by candle, piece by piece. You could still get into a short technically on QQQ. I wouldn't really be too willing to do that just because I don't really know what's going to happen with the elections. But that's all I'm really saying is prior to the elections, major run-up trade, major retail expectations of blow off top market, while this does not have enough liquidity sitting in this range for a blow off the top. There's not enough demand on hand. There's not enough bids filled. There's not enough inventory that's in a strong buyer's hand that's going to be able to move price higher based off of what we could see about the auction within the past 2 weeks, right? We could see that this is basically just a slowing sign of progression. There's no trader really underwater, and you're basically just going to get the reversion naturally in every single market condition like this, guys. So that's how I saw QQQ. It ties in, like I said, with the window weakness, with the expectations that everybody was having, with the blow off top. They're baiting the previous high over here. If you go take a look at something like the S&P, this chart was a little bit cleaner just because we had some recent moves in financials. However, I would really love to see this 565 spot get retested just for a strong structural uptrend. And yeah, that's another thing. I also really like trends that have retests. I don't like blow off tops that don't give me retests, right? So if you're building up a lot of liquidity here and then you pull down, pull back up, find a higher low, then break out, and then you're kind of climbing your way higher, and retail's all like, oh my gosh, blow off top, and a window of weakness all the way up here, and you never retested this massive level down here, then I have a problem. And maybe there's a gap that's sitting over here. Maybe there's a dark pull print that's sitting on that gap, maybe slightly beneath. You might have, some sort of phantom print that's a little noisy to the upside. I don't care about that. I just care about simple structure, simple volume, price, how strong is a trend, is there things retested, or is there things filled beneath me, how imbalanced are we essentially in the chart beneath. And it's not been a clean looking chart up here, and I've been saying that, and I've never been bullish from an index level perspective in 2-3 weeks. So I mean, take it for how you want it. The short's not really too easy to time, I must say. Neither side of trading right now in the market has been really too easy. Let me close my door real quick. Neither side of trading right now has really been too easy, but I already gave a recap on basically how I was trading the market and shorting the market over here, and I've probably shorted the market successfully now 5, 6, maybe 7 times ever since we crept our way into that window. And this was where the window actually started, and they were actually front running this with a preliminary sign of distribution happening over here as we tested into the bear gap, and then we got our strong flows return, which was a bounce right into the October month where you're building up liquidity off of 478.30. Yet again, a higher low that doesn't have a true strong, clean amount of volume to have enough effort essentially to outweigh this effort over here and outweigh this volume coming in on this day. And then whenever we make the new high, and then you get a candle that looks like this on increased volume, it's like, are you going to get a buyer on the subsequent higher low that's being able to outweigh this effort coming up from over here? And then if you do get a higher low, then you want to monitor the next following upper range, which would be potentially a lower high for structure to develop off of filling the entirety of the gap. That's why I caught this short on this day right here and this short over here. And then obviously if that fails, then we would look for a take of the external, meaning a liquidity grab, and then obviously what happens after that liquidity grab. And that was whenever we had all the reports coming in, right? Which was enough opportunity for a seller in the tape to be able to then sell more. And fully get out of their positions and unload and then reload. And I guarantee you that's what they're going to do, right? They're unloading up here. They're going to reload somewhere down here. And then we're going to see an upside move. So that is QQQ. BA. I love BA. I'll take it -3%. I stopped on this chart once. Doesn't really matter because I stopped for 25%. I won for 60%. So do the math. This was a beautiful, beautiful, beautiful chart, and it didn't really look too clear from the daily perspective, but you can't be scared of these things, guys, especially whenever you're getting tech blood, right? So tech was bleeding on Thursday, and so was BA, and it really did lose me here because BA has been a beautiful chart. We just had almost record high daily volume, plus 1.5%. So we can essentially say that there's definitely absorption for sure, meaning that someone is being liquidated, someone is being smoked, or else it wouldn't be a tighter daily candle. But from an intraday perspective here, guys, this was basically just a gap down. If you go over to this day, it's basically just a gap down, crazy volume off of the open, a million volume off of the open. It wasn't a crazy gap down. I think I accidentally said that. And then it just started to rip its way higher and kind of just consolidate into the close. So we can basically conclude with the intraday trading action that this was technically buyer dominant. It's 1.5%. Keep in mind, you always have to tie in the result with the effort shown in the chart. So we know that there's a campaign building here, but it's not a complete campaign because there's absorption within that bar. Only 1.5% on 66 million volume is telling us something. That's telling us that two players are playing here essentially. Two players are involved. This was a big seller and a big buyer, and there was almost like a little disagreement. So if it was all just one big buyer and shit would get wicked, right? But it didn't. So if you go take a look at like other crazy volume in the name, like as you guys can see, 40 million volume, and this is down 7%. And you guys can see how this continued to underperform itself for quite some time afterwards. You go take a look at some other crazy volume. You could see over here, this is only minus 3 point something percent, but you guys can see how we have a gap up involved with this bar. You could say that this is seller dominant, but there's also a crazy gap up. So is it fully seller dominant? I don't know. But I just really like the dip, right? So this trade up here could have been a little bit unnecessary, but that's also in hindsight. I don't like to speak in hindsight, so I'm totally okay with that loss. But this was bleeding with tech, and I'm longing an industrial all day that has potentially record high buy volume on a pullback of minus 3%, right? On more than less of this volume. This is 66 mil. This is 29. So this is double that, more than double that. So I love this pullback all day. I do. I feel like we could find some sort of double bottom slash higher low. I swung over here on this little base, and then it gapped up and then creeped back up into the resistance. Good little scale spot for your first initial scale. I still hold some here because why would I want to cut this? You guys got to remember, whenever charts look like this is almost like a wider perspective of a chart. I'm looking at one bar. I'm looking at one candle. But that one candle can bring direction in a directional read for multiple weeks, for multiple days with that kind of volume. So that's whenever it leads me to believe that this is one big, massive accumulation that's going to be building. I am going to be trading BA heavily in 2025, especially if this thing really wants to chop around and build out a really clean sell climax, or maybe like an accumulation, something like Roku. I mean, I'm not saying that that's going to happen. I'm just saying, you know, look at like some sort of schematic that looks like that. If BA builds that in the 2025, I will be all over the name. This is what just really catches my attention whenever I look at things like that. So, not JPM, but that's BA. I basically am just looking for, as you guys can see, this was your previous earnings candle. Extremely low volume, guys. Not 15.9 million volume versus 66. That's a problem. That's a big problem. That leads me to believe that someone is really trying to get into BA. Really, really, really trying. And then you get your headlines afterwards. So I think with a clean, strong daily print the next following week, this over this little wick series at 156, I think I'm going to take this up into 160. And then if we could basically claim this gap as territory for us, which is basically where I'm looking for the daily print to be closed at, above. So essentially what I'd be looking for would be daily print, pull back higher low, shoot for the high, shoot for above the high. I'm basically targeting the 166 to 165. So if I can catch 10 deltas, or actually more, if I can catch 25, or no, I'm sorry, 15 deltas on this, I'll be extremely paid. I actually have more of my position right now than I did. Like, not more. What am I saying? I have more. Like, I have like 4/5 of my position. Yeah, I'd say 3/5 because I bought some really expensive cons. The March 23 banking scare volume was the best example of volume I've ever seen. Volume precedes price. Exactly. Yeah. Um, it always does with every single one of my trades. If you guys take a look at every single one of my crazy good trades, I'm not trying to be cocky. I'm just saying I've had some really good trades this year, like Marvel, for example, or like um, Tesla. Tesla was a beautiful one. Obviously, all of you guys know about the Tesla schematic. Baba, I was all over Commons actually with Baba back here. Um, I mean, here's your volume, and the price action afterwards and price covered over time is basically okay. Yeah, I mean, you have volume in between that, but when you understand the supply and demand dynamics of this is all filled. This is all filled and consolidated within. I talked about this with the Marvel chart too, guys. One thing that you guys got to understand about like volume pouring into a chart is like if price consolidates off of that area for a very long time and then eventually it gets the result off of the consolidation from that area of high volume, for example, this candle here, and then the subsequent consolidation that's happening within that bar, there's no supply left here. You guys got to remember a lot of the times why volume works here, guys, is one, either the change of hands happens in the tape where, okay, you have someone with a tape with stronger order flow that then pulls their ask because they understand how good a chart looks. Or sometimes it's just absorption, right? So on a candle like this, you could have a lot of sellers that are taken out on a candle. Or sometimes it's just the candle doesn't work anymore, right? It doesn't work. Like this candle, when this pulls down, pulls back up into the range, people would be looking at volume patterns and say, oh my gosh, look at this minus 10% day on 37 million volume. That doesn't matter. It doesn't matter. This does not matter over here anymore. It already brought us the mark down. This is why Wyckoff is very, very good. And this is why understanding the spring is also very, very good. It already brought us the mark down in the spring, right? This is your spring down here. This is your terminal shakeout, right? So whenever I'm looking at your LPS from over here within the earnings territory of the gap from here to here, do you think I really give a fuck about this candle? No. And a lot of people do. A lot of people that I don't want to be rude, I don't want to be cocky, but a lot of people don't really understand VPA or how the market works either. And a lot of people do trade VPA. So, yeah, just understand it like that, please, because yeah, that's how it works. So what's another trade that I had this week? I had what else did I have? I had everything else was just small. I had JPM. I had DKNG. I had MU. These are all intraday. We'll go over to CVX. Okay, so CVX was another name that was waiting on a report. I don't typically swing into earnings, but I was pretty confident about this one. And the reasoning as to why was simply just, yeah, I'll go over Disney too. I still own this chart. I'll go over that one. So the reasoning as to why I own this INTC, I never traded options. I mean, I have a position on INTC now. I only traded shares on INTC. Um, what was I looking at again? What was the chart I was just on? What was that? Oh, CVX. Um, So CVX guys, energy, defensive. That's my first initial thought. You always got to think, what is also kind of moving right now as of lately in the market that's been basically getting me to like energy a little bit more. And we still have reports regardless of anything that happens, but this I've been clear to you guys, this has been my favorite energy chart, CVX. What did I compare CVX to? And first of all, it's the yields. The yields are on a big leg. The 10-year yield's on a big, big, big leg. So it really gets me thinking. Obviously, Zom marked up and then got absolutely hammered. I don't really give a shit about that chart. I care about CVX because it's an underperformer, and we're building out actually a very clean structure of accumulation that's happening off of a previous swing low on the weekly chart, where we actually had a break down failure. So this isn't just a wick. This is a candle that broke down, and you guys got to remember, sweeps don't happen in such a picture perfect world. So when you're taking the breakdown and you're like, oh my gosh, I got a candle closure beneath. This is why traders suck that go on Twitter and they just target an audience of all bots that, they want to get their $120 a month Discord going or whatever, is because they don't understand that like breakdown trading is terrible, right? People would say, you would get like your PB or your Jake W guy to say, "Oh my gosh, breakdown candle closure. We got to close beneath the level. This is really nice for puts." And then it rips and then it moves its way a little tiny bit lower and then it finds a hammer and then it reclaims the range like butter and almost on effortlessly, and then it pulls back, it's a higher low, and that's basically how you look at a inverse head and shoulders. Obviously, you would have your pattern traders talk about this thing all the way up here, which is not a good practice to really have. I've been on CVX all the way down here. It's just, I think I caught a couple legs over here. Yeah, I did. I caught a swing over here for 100 and something percent. And then we just got really clean consolidation above basically the neckline. Yeah, don't short the hole. Really dumb, guys. Because, they're institutions like to accumulate whenever you think, oh, I got my breakdown candle closure. right? So you don't want to front run it, but whenever you look at a move like this and then the higher lows after, you kind of need to know that this thing's marking up, right? And then what I talk about is bar by bar imbalance. If you guys haven't looked at that video I sent you through the email, please do. It happens on any sort of chart, any sort of time frame. You have a massive imbalance candle technically, and a true, I don't like to say this word, but a true FVG. FVGs are a thing. It's just I don't like to call them that because I sound like a nerd, like a ICT nerd, and I don't look at them in any way, shape, or form of an ITC kid. It's more and less just understanding how pricings move higher into these areas to collect supply off of them, right? And this was a major breakdown candle followed by two breakaway gaps afterwards that led to the preliminary accumulation, followed by the spring, followed by the higher low, followed by the LPS, and then obviously the markup through the report, right? You can't really be too scared. I was just buying the dips down here off of this ad zone at 148.55, and I was swinging them into the report. I had about half size in total, right? So it wasn't anything like a crazy, crazy, crazy confident call. You never want to be too confident with these things, but the implied move isn't really ever too big with a name like CVX anyway. So I'm not really buying into premium that's like absolutely unbelievably priced, right? So it's at the end of the day, I don't really care about swinging through the report. So that's basically how that worked. INTC Commons, it's been a beautiful accumulation. You got to think about where price is going to move into break even areas. Where most institutions break even at. If you just zoom out and take a look at the chart, where do you think most institutions or a lot of institutions are break even? At the gap or at the consolidation that we had for several months over here, right? So I would say for a tax harvesting thesis as well, is this just basically, if you go to the weekly chart, guys, this is another thing. Everyone's saying, oh my gosh, weekly candle closure, breakdown candle, holy shit, short it, this thing's going to die, INTC is going bankrupt, blah, 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 I'm retarded. Yeah, you are, because this is just not how you trade, right? If you shorted INTC up here, or maybe on a higher low over here, or maybe on something that looked clean over here, okay, props. I'll give you a pat on the back. If you're shorting it down here, I pray for you. Even if you win, it's still a terrible trade. That's the mindset that you guys have to get in is, even if a trade wins, if your risk reward is not in check, if you don't have a clear, strong signal with clear, strong risk reward and a clear, strong risk that ties in with structure, then it's not a good trade. It's not. You could win, it's still not a good trade. So this is INTC. This was a major markdown. Everyone gets their peg thesis going when this thing marks down like this, and I do understand that that's a lot of volume pouring in, but you guys got to remember, on such substantial dips beneath previous swing lows, that's likely where an accumulation could potentially start to happen, right? Because you got to remember, this candle right here, who's really going to be selling off of this candle? It's just going to be a buyer buying, reselling, buying, reselling, buying, resell. And that's why the lower low accumulation is a thing, is because buyers buy, buyers resell, buyers buy, buyers resell, until they get to a point where there's a path of least resistance over top of the chart, and then that's whenever the accumulation would be in its markup phase, right? So I didn't really like how premature the campaign was. I typically do like lower lows after big markdowns. So what I mean by that would be something like the Roku schematic I talked about, or if you go over to something like Nike after that big markdown, you guys can see how each and every single new lower low was making absolutely no progress, and this was not a seller actually. This was a buyer pulling bid. This was basically no seller pushing it down, and then a buyer just reaccumulating after the stops are taken out, and basically at the cheapest price possible, right? And that's whenever it led to a very, 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 very beautiful markup, right? I mean, and if you're looking at this from like a perspective of like what is the ATR on Nike, I mean, guys, a 20% move on Nike in 22 days. You have monthlies there. That is a multiple hundreds and hundreds and hundreds of a percent gain on those calls. So, I mean, these charts could be amazing, and INTC's premiums are not bad. They were bad into the report. That's why I never traded options. But this was a beautiful commons trade on the base over here at like 21, 22, taking it all the way up into 23.50. I'm going to be looking for the swing high over here. And I was buying previously over here, but I'm just saying the retest here was a nice little opportunity to add some commons if you would like to. And I'm going to be looking at this chart next week. We just actually got news that this was actually discluded from the Dow. I don't care. I just don't give a fuck. Like, once you start not giving a fuck, you'll catch more moves on really clean multi-day movers. You need to not care, right? We'll obviously analyze the volume on the gap down. We'll analyze that first opening orb. We obviously have an election, but people are gonna just jump in and short because it's removed out of the Dow. Like, are you kidding me? Really? I mean, we're getting harmonic volume retests, multi-week bases, a clean, more buy-side favoring candle, but you did get a strong, clean, constructive retest of the earnings candle high from over here, which was also a previous daily resistance. You're getting basically bullish volume patterns where this was basically a massive news catalyst that had a lot of volume and a decent seller behind it. All right, but that seller was then just munched up and bought up again. And this kind of just was. And first of all, guys, you guys got to remember a major wick on a candle, it doesn't necessarily always mean something because whenever you get a major gain in such a quick fashion on a candle, the gains are going to be given up a little bit, right? So don't use like that wick as anything. Don't use any wick like that as anything that's too relevant. And this was also news at the end of the day where they sold it back off. So it's not really the biggest deal in the world when you're looking at a wick like that. And then it just continued its way higher into a retest of this previous monthly swing low. Keep in mind, guys, massive. Oh, I'm on the 15. I'm sorry. Massive, massive, massive level over here. And we're getting harmonic volume, declining volume off of it into a retest down here, and the volume's drying up into a volume pop again on a buy side candle here. So when you're looking at the whole range, you're looking at effort versus result. If this really truly wanted to be redistributed within this bear gap, you'd have more volume from the upper end, but you don't. So yeah, I'm gonna be looking at INTC. I'm gonna see. I want to take a position after the election because, like, guys, you guys got to remember with elevated vol, with everything that ties in with potentially where the election could be taking volatility to. I feel like it could already be priced in for sure. But if this remains elevated, please just avoid the options trading. Please. Just be very safe with it. Don't take exposure to bad things with bad fills that don't have super defined risk. Understand the premium that you're buying. Buying options within a 23 VIX is not really the best case scenario. So we'll see what vol does leading into the election. Could it be priced in? Could vol not really move at all? Yeah, it could. Do I think we get vol up, market up into Q4, the end of Q4 into January 2025 OPEX? Yeah, I do. So I do think the market's going to get a little bit difficult to trade from a volatility and premium perspective. However, I will be looking at INTC, and I would really like for this thing to build out something clean leading into after the election and FOMC. There's no promises that it will, but if it really, really, really does, I'm trading it. So that was the INTC chart. I was also buying commons at the new lower low and also basically over here. I don't really like put all my size with commons in at one general area. And then whenever the chart started to look really clean into the report, that's whenever I started to purchase the retest and actually size up a little bit because I didn't have the size I wanted to have over here. So yeah, I mean, that's the INTC chart. We'll actually see how that one plays out here soon, and we'll go over crowd now because crowd's a very beautiful, structurally clean daily chart. Remember how I just talked about true, strong, clean, constructive downtrends or uptrends need to be healthy. They need to be filled. They need to be retested. There needs to be really nice lower highs or higher lows, right? You can't have a trend that is just in a parabolic breakout, breakaway gap scenario where there's no true, strong, clean retests off of where you're getting your higher lows at, right? And you're leaving, potentially gaps behind. This is unhealthy. right? And same goes for the basically the same thing but flipped. Bear gaps beneath you or above you. Major capitulating trend, tons of volume. However, you're not getting any true strong consolidation. You're basically just getting gap down, followed by maybe a little bit of relief, then a gap down, trading almost like inside bars, another gap down, and it's basically just so overextended from highs to lows. This is one of the biggest names in an industry, and it's down 49% in a month. What the fuck? Where's the retest to, guys? It's to the weekly breakout level. Does that make sense? Probably should. Alrighty, so whenever we take a look at each and every little single individual piece of this chart, what does it tell us? I mean, I'm losing a little bit more interest in the chart now, but I have slammed the table on this thing literally since all the way over here. At 285, we moved up to 320 within a trading week. So if you didn't get paid there, you have issues. If you did, fantastic trade. Very proud of you. And let's just talk about that. So stair stepping, yeah. I mean, you're getting your swing low. This is the August 5th candle. I talked about how structure will respect itself to develop for higher lows off of this candle. So what would we ideally look for? Discounted entries off of the low. This is where I was initially looking at crowd, right? I took a previous flush on the trade. We got a very clean 4-day base off of the progression gap that's sitting over here. It ties in really nicely with swing low, swing high equilibrium, right? And then if you're looking at the weekly, I mean, guys, it's just basically a weekly higher low. Volume patterns are really declining here, as why would you ever want to sell crowd at $275 or $250 after it just seen a drawdown from $395 at highs literally like a month and a half ago? Why would you ever want to sell that? I'm just really curious if you think there's really going to be a seller. I'm just really curious if you think anyone gives a flying rat's ass about that. Do you think anyone gives a shit about this, dude? Do you think anyone cares to sell over here? Do you think that this is like, do you look at this as like, you always got to use context to a chart, guys. Do you guys think that this is a break of structure retest? Because I teach to break a structure, but do you think that's a break of structure retest that's good to take? No. Okay, maybe up here it's okay. Maybe up here, because you have to understand a break of structure could typically will bring a little bit of drawdown. It's into a report. The report had a wick behind it, and then it obviously saw a little bit of drawdown. I don't care though. I'm looking at the bigger perspective of this. So we got our discounted higher low, 4-day base on that one, and then I'm looking at another higher low. The higher low is basically respecting right off of the bull gap. This is another just a simple discounted range. Swing low, swing high. There's your discounted range, 270, 220, which is also a bull gap. This is whenever I was first initially loading swings. When did the Vanna Charm return to the market? The beginning of October. Guess what also happened in the beginning of October? Technically, the first week into October is when Vanna Charm returned. October 7th. Well, guess what happened on October 7th? What was tying in perfectly with this chart on October 7th? Well, we pushed higher. We didn't fill the gap. We ever so slightly did not fill this weekly gap. October 7th, which is this after this candle print. This is October 7th. This little wick here. Look what happened on this weekly level right here. Boom, resistance, consolidation, red to green, weekly print, hammer, higher low for your secondary higher low. Also right off of the bull gap. So I had some size down there, and I had some size into momentum on the weekly candle closure, and then basically what my risk was now. Ads are beneath what my risk were, just because I know that this chart's moving and it's going to move its way to this gap fill, at least. And if you go into the daily, we have much bigger gaps above us to target, right? So I know my risk to reward down here is insane. And I was planning on incrementally adding into the bottom of the gap, and then I'll risk the bottom of the gap at 267. And then once we got above, that would be my trailing at 285. That was a beautiful trailing to have. Basically, the Friday session's low of October 4th, and then the flows returned, and then this thing was a absolute monster. And you guys got to remember, this was also where we had strong flows returning, and this is also where we had the leaders emerge, right? So we had PANW as well. That's another chart I was all over, and these are the kind of charts that make your weeks, guys. Beautiful discounted range, swing low, swing high. bullish volume patterns on this candle over here. And what it did was it filled a bear gap. So we got some short-term digestion and rest on this chart. And then what happened was we pushed our way back lower, 239, 230, or I'm sorry, 229. So basically the 230 psych, this got a double bottom off of. And then that's whenever we led our way higher off of our confirmed weekly higher low, which was just a very clear sign if you're looking at these 4 or 5 weeks of trading action that are happening over here, where it's just holding from a weekly perspective of like the 330 area, very, very, very cleanly, right? And then we get the mark up, and then we target the previous high, right? Because we don't have any gaps above us to target now. Essentially, basically all we have from a daily perspective, we do have this gap over here, which made me scale originally on the trade, and then obviously the trade with time you take up into this wick, you take up into the earnings candle area because price always moves to the higher volume areas, and then we saw no sell side effort, and basically the only effort we saw from sell side was technically swiping the previous high, which is your external. That's your all-time high. Actually, yeah. So that was PanW. These were the two charts that were leaders. I'll probably end up looking to re-roll these things for a secondary higher low because we got our first higher low. I'll be looking for a second, especially in a bullish market with tech moving. I'm basically just going to be looking for this gap to hold from 355 to 348. If you want to take a look at swing low, swing high discount, you're basically dealing with discount from 356 to 349.73. So basically the 350 psych. I will be looking at this one. This is a clean chart. Oh, I took a JPM short. Does anybody? Well, can you see why my labelings are all? Can you see why my labelings are all here? Like, do you know what I'm talking about? Same kind of the same concept with Netflix. Same concept with QQQ. Um, same everything with a distribution schematic that happens that people can't see because they don't look at volume, they don't look at price, they don't look at progression, they don't look at anything. So this was a speculative trade for sure. I had smaller expiration next week, so this upcoming week's expiration. I don't trade any weeklies anymore. But the higher highs have been sold, and they've been sold aggressively, and there's been a lot of dominant sell side volume coming in on these moves, right? We previously had a liquidation candle sitting over here, and then we pushed our way higher. The earnings report volume, not as much as this volume over here, but like I said, price action already covered throughout this whole entire range, so I don't really care about this candle to be respected, but what I'm more and less looking for is if the same seller that's been in this chart for however long is going to reappear on this previous swing high failure. And that's exactly what happened, right? So everyone was looking at the little flag break. A bunch of like dorks on Twitter that like are literally pros at scamming. They talk about all of this stuff, oh, flag break, yeah. And I was looking for a sweep, so this was on the trading focus as well. Look at that 15-minute candle, literally right there. Absolutely insane. We have a little slight lower time frame gap beneath us to target. And then that's what I targeted down there. I got a nice little gap down. So basically a short from like 225 down into like 221, like 50-ish, 222-ish. $3 move, not anything too crazy. JPM isn't crazy premium either. It's a 35% win, and then the rest stopped break even. Whenever I'm up 35% on a chart like this, that's a little bit speculative. I just put the stop at break even minimum so I don't lose anything. Disney. Disney looks like Marvel, kinda. Not really though. Not as clean. This is all higher time frame accumulation in my opinion. This over here, right, you have your markdown, you have your fill of the gap, and then it moves its way lower into a report. It tests the top of the gap. You get your initial signs of volume ramping on the initial test of this gap over here. That's why I knew the fill of the gap was going to have a buyer and not really too much of a seller because there was already a buyer on top of the gap and a nice little pop higher on top. And then obviously the report came down and it driven. I'm retarded. It moved our way lower into the bottom of the gap, right? We fill the gap, we get some nice consolidation off the bottom of the gap, we rip higher effortlessly, followed by a higher low, a discounted higher low too, right? So structure developing after a very clear, clean swing lows being put in off of a gap fill. And then what happens is boom, right here, bull gap, red to green hammer. It closes above the previous 3-day buyer's bid. So this is 3 days of action where it closes actually above that, and then we get to move higher, right? So this is your buyer's bid right over here, and it's basically just a little trap with a very clean hammerhead as far as where that closure was on increased volume, and then we just rip our way higher. And then you had your opportunity to roll on these higher lows above us on declining volume, and then it just pushed its way all the way back up into just in the middle of nowhere essentially. And then you get your cool off, no crazy volume behind it, retest, strong, clean retest. So I can look for a higher low technically on this bar. Same way I look for a higher low from here to here is the same way I look for a higher low from here to here. Because what did I just talk about? What's a law of mine that I talk about? True, strong, clean charts need retests. We got a retest. We got a slice through candle of this daily gap that was actually had an ask on it, had a stronger seller ask sitting there, and then we absorbed it and we broke it through on a beautiful candle, and we've just been basically sitting within discount to defend that candle, right? So you have your 618, which is the bottom of the gap area. If you're looking at protecting this candle, and then from low to high, we're nearing discount, but I'm not going to take the trade all the way down into discount. I have some size, but it's into the election. I don't have a lot of size here. I will have a lot of size here soon. This chart's going to pay. I know it's going to pay. I just know it is. So catch it or stare at it and don't make no money. That's up to you. But me, I will be playing here. Everyone, a lot of people were saying, "Oh, Marvel, what do you see here in Marvel? What is this doing? This looks. What do you even see? This is just so choppy, man. It's a barcode." No, no, no. Things chop for a reason, brother. Things like Disney chop for a reason. So, yeah, I would love to have some exposure to this name, some big exposure here soon. If you go to the weekly, pretty clean weekly chart. Not anything too clean just yet, but I'm just looking for that breakthrough candle, that follow through candle, and I feel like we can get it. So, I don't know. We'll see. We're in a double inside week into the elections, so a lot of things could go wrong there for sure. And I don't want to like hold too much unrealistic expectations, but I said and sounded like a broken record for several weeks. I am getting paid on a QQQ short, and that's my only focus. And that's what happened. Whenever I say something, I'm not like bullshitting. I'm not like saying it for fun. Like I'm getting paid on a trade that I can find a directional read on, and I'm getting the hell out of this market, and I'm not using a lot of risk elsewhere. And that's what happened, right? I mean, I had my small wins in between, my small paper cuts, my small losses in between that. But at the end of the day, I'm just trading charts that have higher probabilities behind them that a lot of people don't look at. You have people, like I said, okay, we'll go over the minor. Do you guys understand why I hate minors? I feel like I try to teach this so much, but like, do you guys actually understand why I can't stand these and why you need to understand and read the retardation coming from a particular side whenever they look at these things? Do you understand that? Like, a lot of like big reputable traders on FinTwit even try to push these charts, and it's like I just I honestly just don't understand why you like these. And have I been wrong? I have not been wrong. You're gonna have your guy that says, "Oh yeah, I sized in here and I sold here." Like, sure, okay, yeah, but is the chart performing well from a larger, bigger perspective for having that kind of implied vol? No, it's not. So with the miners, you have to rely on Bitcoin. This is a seed oil trade on Bitcoin. In hindsight, it moved its way higher. I don't like to talk about hindsight. Not at all. You know, people are going to say Bitcoin's going to move its way higher. Okay, buddy. Well, you were saying that all the way over here. Okay, and that is October 21st. Let's go look at Mara on October 21st because that was apparently your trade to the Bitcoin. Because you're an option trader, you're not a leveraged Bitcoin trader. October 21st. Look at your fill on Mara, 100% IV. You're filling at fucking $18. This saw a week of consolidation, so that implied vol is already cooking you. 7 days of consolidation, followed by a leg up from your fill that was only 8.5% on the underlying, which is essentially nothing. After 7 days of consolidation, you're pretty OTM because you're buying time on elevated premium. You don't want to buy the super expensive contracts, and you're sizing irresponsibly into basically predicting that this is some breakout. It got ever so slight breakout, and then it failed, right? And this is basically just a chart in a trade for shitty traders that don't understand like anything about miners, anything like that, right? You have awaiting reports. And miners don't always agree with Bitcoin, right? So whenever they're not agreeing with a candle like this on the October 29th, and you're taking a look at Mara on October 29th, and you're getting just basically a candle that's a leg higher into the breakout level, and then you fail the breakout level 2 days later, it's just a shitty fucking chart, dude, because Bitcoin, you're really going to rely on Bitcoin to go vertical? Under an implied vol that needs Mara to go vertical with Bitcoin, and it needs Bitcoin to not get retest within the breakout itself. Look at that weekly chart. It looks like shit. You go over to something like Coin, terrible premium, terrible everything, terrible spreads, terrible premium, terrible volatility, not promising at all. Look at this. Okay, like if you're filling down here, sure, but like why wouldn't you just fill crowd on better premium on like over here? Why wouldn't you just fill on crowd from here to here? You know what I mean? Like you got people don't understand the premium that they're buying. They don't understand like Riot, terrible chart. And I feel bad because I have friends that trade these, and I'm not trying to offend anybody. And I've been saying terrible charts since everyone was so bullish on Bitcoin. So like I'm not saying this in hindsight like, "Oh, you lost. This sucks." blah 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 blah. No, I've just been trying to spread a message that a lot of these charts in that premium, they're expecting the chart for you to get paid and for you to have essentially good risk reward for the chart to do something like this. And it's just not doing it. It's just not doing it. You're getting almost little to no leg that's substantial with Bitcoin on a leg like this, and then you're getting the consolidation in between, and you're basically just throwing technicals out the window, and you're dealing with looking at major drawdown because I didn't know Bitcoin was going to do that 2-3 day leg. I mean, you could speculate that for sure, but I thought this would be a move that would be hard to catch. And have I been wrong about that? No, I haven't, right? You're going to have your people that said, oh, I bought Bitcoin options. I bought my shares here on Mara and I sold my shares at the top of Bitcoin. You know, but everyone's looking for that all-time high break. Everyone's looking for that weekly breakout, right? They were previously looking for the weekly breakout, and a lot of them got bagged on that one too, where this one actually broke through. And then if you go to the daily, everyone was so bullish over here. October 21st into like October 25th. Those 4 days of price action under the implied vol of something like Mara over here when you're trying to size in for a breakout. And then you get basically a like 10% drawdown on the underlying from your entry. You're toast. You're super toast. So yeah, I mean it's bad premium. Sometimes shitty spreads. Basically terrible overall. I mean, you could be the MSTR guy that like brags about that and like talk about how you got lucky with the outperforming miner. It's not necessarily lucky. It's just you're not going to you're gonna get like clapped. So I would just block out the noise because trading long term options are dangerous. Trading MSTR premiums are extremely dangerous. You're going to get smoked trying to trade like these little breakouts here. Because you're eventually going to get knifed and end up losing the entirety of your position. So yeah, that's that. That's miners. Basically just bad premium, unpromising volatility. you need the agreement of the miner with Bitcoin. That's not even always a guarantee. So that's why I say just disregard them, right? Buy the better charts, buy the better charts that have better options. And those are typically also the names that are less crowded. You guys got to remember the most crowded names are the most scammy names because the most crowded names are the most volatile names. And the most volatile names don't always bring that promising volatility that's priced into those premiums. And a lot of these miners did not do that. They failed to do that. So I see people, I see so much eye candy on Twitter. And props to them. I'm happy for you. If you made a lot of money on MSTR or Mara or Coin or whatever on a retest and you caught a really nice, awesome move higher on weekly contracts, I'm happy for you. Congrats. I wish I did that. But I'm here for the long game, so I don't touch 0 DTE or 1 DTE or 2 DTE MSTR. I don't do that shit. So, yeah. I mean, I can make money elsewhere being a grandpa. So as far as the next week's scan goes, I'm gonna make my video after that. But W Day, if interested, filled gap and knocked out a whole lot of players Friday. W Day. Oh, that's K Day. Beautiful chart, yeah. So, Fade, you always bring up some good charts, man. This chart is really, really, really nice. I love that volume increase. I love the sweep of this external, followed by an increase in volume and a really nice, strong candle closure up towards the highs. That's what you guys always want to look for in charts. If you're an EMA guy, this is basically just trying to get above those, right? So when you're looking at a seller ask perspective of candles that can't close above, and maybe it was a previous support, you could look at a closure above something like this at 240 for your next trailing on a swing, and then start looking for lower days to be established off of those areas. So something that looks like that, and then you continue your way higher for a multi-day swing. That's basically how I would look at W day. I really do think this chart is clean for sure. Um, Cons Pay have played many a times. That's another really nice thing about it. So yeah, guys, as options, as us guys buying options, we're options buyers. That could be dangerous. So do you really want to be purchasing scammy premium? No, I personally do not. So that's why I don't. I'm a boring guy, especially in a window of weakness. I can be more fun at times. I totally can. I could trade an MSTR 0 DTE or a fucking Mara 0 DTE. I know how to do that, but it's just I'm not in the mood for that shit right now. So, yeah, this is another example that Fade just brought to our attention here of W Day. Really, really, really clean external taken over here, followed by an increase in volume. Also at the basically almost a gap fill. It left it behind ever so slightly, but you can't nitpick every little tiny thing in a chart that isn't in a picture perfect world. And then you have your EMAs above you as well as a seller assets at 240, right? And there was really no volume coming off that area. So if it breaks that into Monday, I really do like the chart. That's basically how I'd look at that. There ain't really much other of a chart that I like. I'm gonna actually add that. Thanks, Fade. I'm gonna add that to my focus. I'm not really gonna be taking a lot of positions leading into the elections, but after FOMC of some of these charts, I'm gonna build together a decent list of tickers, guys. And this is typically what I do with a binary event and a major event, major catalyst for the market. I'm not even gonna necessarily say it's a catalyst because expectations could still not be met. And everything could have already been priced into the market previously, so we don't necessarily know. That's why you don't ever want to front run based off of expectations of an event that's on its way. But if we build together a decent little focus list of a lot of tickers that are building out clean charts, so like we have INTC, we have BA, we have I can get rid of CVX now. We still have crowd potentially to take. I have shares here. We have potentially PANW that I'm going to throw on the focus. What's D-Dog doing? I kind of like D-Dog previously. Yeah, we have D-Dog. We have a lot of these charts that we could start putting on the focus list. I can remove ZOM, BA, JP, maybe JPM. Yields moving higher does kind of have my attention just a little bit, especially if tech starts to bleed and then maybe financials give up. I'd be looking for an S&P short to test back into this level over here, which kind of ties in perfectly with this 560 consolidation. And this is your previous external. Yet again, similar, very, very similar, guys. The all-time high on the S&P was being baited over here, and this was leaving behind an imbalanced trend. If you go take a look at QQQ, actually, that is right over here. External, bait, imbalanced trend beneath you. SPY, external, bait, imbalanced trend beneath you. So, yeah, I think it's going to do, and as you guys can see, we fill the gaps, right? We fill the gaps, and then we continue our way higher, right? We have these gaps that are sitting over here with prints ever so slightly beneath. There's not enough liquidity in the market to push our way higher over here, and I think for preparation of that Vanatron below top environment that we could potentially enter, it would have to be a fill of 472, 471.50. So I actually do like my short. Sorry, I had to spit a massive hawker. I actually do like my short. But yet again, there ain't really no promises with this major event coming, meaning in the election. I just like breathe that in, dude. Oh my gosh. Alrighty, so I see Dell need 127 retest, maybe Snow, bottom play on DG, Dollar General. Is this in the fade? Is this in discretionary? I don't know if it is or not. If it is, I'm bullish. All right, I'm bullish. Yeah, I mean, all of discretionary that's been bottomed has been accumulated. Look at Lulu, man. Dude, I've been so bullish on this chart. Have you guys heard me talk about this chart at all as of lately? As being like one that was with discretionary. Yeah, like this actually hurts that I'd never I caught onto the chart over here and I didn't love the fill. And sometimes, guys, you just got to take a look at this chart and say, yeah, this is kind of a laggard behind a major, major, major rotation that has been happening within discretionary, right? And I feel like it's a little bit of a front run, but it's much better than a front run on essentially nothing. I mean, we had a thesis here, so this was such a beautiful chart, man. It was so nice. I mean, you had your previous Nike run, you had McDonald's, you had Starbucks, you had all this stuff happening, and then you get into something like Lulu. Same general concept, right? I mean, this is taking out a previous external. I always like to talk about the external because that's where a lot of the liquidity and a lot of the stops sit. And this was a major imbalanced downside trend. And then you're getting your August 5th candle. You're getting your discounted higher lows off your August 5th candle, followed by your higher lows after the first higher low. It's like the same fucking chart, like almost the same concept that I trade with like everything. It's like over and over and over and over and over again. I have Lulu Commons, but that's it. Bro, I knew that there was an auction that needed to happen at 256 after the initial push to 281. I fucking fumbled it. Yeah, I did too. I did with options. I mean, shares were easy. Options are not easy, though, in this chop, but it is what it is. I mean, we could have bought like December's or January's of next year and basically just bought them and never look back, you know? Sometimes that's all you got to do. But at least we were looking at this in real time and we knew what was going to happen. It's just I had too much focus elsewhere on other charts that had a little bit more of a defined risk. That's why I'm like extreme, but like I could just buy a lot of time here and not look at it. But that's also kind of similar to just like shares, if you know what I mean. So yeah, screen real estate. is precious. Screen real estate. Oh, let's take a look at snow. I'm gonna actually thank you for re-mentioning that because this has been one that's been a focus of mine for sure. Um, this would be a potential LPS of an accumulation. Do I think it's gonna come off of the earnings candle low as a support? I don't know. Um, is it a clean chart? And is it going to eventually be an accumulation that ends up in a markup phase to 135? Yes, and we're at 115, and the premiums aren't horrible here. So we already know the damage we could do with this chart. You know what I mean? Like we know something is coming. Um, is it going to be into the report? I don't know. Is it an accumulation? Yes. Will the dip be bought on an earnings report with a chart that looks like this? Most likely, most indefinitely, it will be. Another area of an external, guys, that's being taken, and it's consolidating off of it, getting a leg. We're looking for a higher low after, right? It's a very trading is so simple, and people make it so hard on themselves. Um, or they just get too greedy or too scared or too whatever. What about these solars? I do like tan. I like tan and FSLR. Look at these lower lows, similar concept. Yeah, I really like tan. Let me get rid of this level. Yeah, so tan, this is such a hard, I mean, this, this is up for who wins the election, in my opinion. Because they can't front run, like, they can't price in that, you know? I think they were pricing in Kamala winning on the run previously, but it gave up a lot of everything, like with FSLR and stuff. They might have been, but this was also just like a quick little pump and dump. But that chart's getting real clean, dude. And I talked about this on the other scan, on the other stream that I actually watched. I should have sized into this leading into the election, just as a lotto. I don't know if you heard me talk about this one at all on my stream on Twitter. External, taken with a gap, reclaims up into the top of the gap, close above the previous support on crazy volume. And if you take a look at like something like Pepsi, it's kind of a similar concept to when I was marked down, reclose back above the support, and then a move like butter back to the upper range, like something like FS, like that kind of candle structure kind of leads me to believe that this is at least going to like 26. And personally, I think this thing could move very quickly up into almost the 250s. Run. It's a decent looking chart. We have earnings though. So I don't really know. This is the best chart though. This, in my opinion, this is the best chart. Look at the weekly. FSLR is always the best in solar, so this isn't like anything new to us, you know? But man, is that nice. Swing low, swing high. You're right off your 618 on a much higher time frame. I mean, I like it. I should have sized on literally yes, but like yeah, I got to keep my port risk pretty tight. Like my week has literally been made off of fucking like literally the most boring shit ever. So I can't really expect myself to commit to sizing into FSLR before an election. That's going totally against my trading rules, but yeah, this chart, man, it is so nice. It's like extremely nice actually. I'm adding this for sure to the focus list. Wonder what this thing can do. But yeah, aside from that, guys, I mean, everything has been pretty quiet. I do kind of like IWM as well for a short. I think this trend is going to crack. We have a previous daily level sitting over here. Obviously, dominant seller volume that was pouring in to the August 5th absorption. We got our legs higher, your first higher low of discount, your second higher low. Volume sort of dry out. This doesn't look too strong. It tries to go for an all-time high, fails. Now we're looking like we could crack higher low trend. And I think they tried to put in a higher low here. And there was no strong buyer there. So I feel like they're playing a little bit more passively as well. And I feel like this thing kind of wants to retest down into here. So I would be looking at swing low, swing high, call side discount for this to mark its way down into equilibrium, which is basically also a gap fill. I might short IWM. I think the market might fucking pull back after we get the president in. Like, I'm not kidding. Like, I don't know what you guys think about that. Like, I think that though. But like I can't like deal with that. I mean, shorting small caps and longing BA, like those two don't go together, you know what I mean? I could have both those positions. It's just this might be my bigger short side vehicle. I feel like it might turn into a really nice position. Or that or the S&P based off of what financials do. So I'm just going to find out what financials are going to do. It's that simple. And then once I find out what they're going to do, I'm going to pick my short. The S&P is coming back to this 561. It's definite. Like these charts are not climbing their way to a breakout with these gaps beneath us. And into an election, there's so much expectations. Flows aren't back yet. They're going to be back, but that the effective weakness doesn't dampen right into a window of strong seasonal flows. You guys have to remember that. You still have to respect the fact that the auction has been relatively weak above us, and we have a lot of liquidity beneath us that is pending to be filled, right? So, yeah. I mean, I'm typically right. I'm not trying to be an asshole or cocky, but I don't think I've been wrong with any QQQ distribution yet this year. So, and so far I've not been wrong yet. I mean, the window of weakness has been ever since over here, right? We made literally one new high of 0.5%, and technically within the window of weakness, we're down 3%. Well, I mean, technically now 2.29, which isn't a lot, but I think we'll see another 3.3% of drawdown, which isn't really too crazy. And people act like I'm some sort of like Michael Gayed whenever I say that. And it's like, dude, you are so brainwashed into being this like perma bull. It's not even funny. Being a perma bull is just as bad as a perma bear. Maybe not just as bad, but if you're like with options up towards like these environments up here, call options on shit like this up here, you're almost just as retarded as a perma bear. No offense. Sell H. I have commons on Sell H. I have commons a lot of places. I'm kind of diversifying my port. I really like how this chart's looking into the report as well. Look at that leg right off of like the gap. And this is why you guys can't hold too much relevancy to a picture perfect world, right? We get lower high, lower, sorry, that's too big. Lower high. The gap isn't going to be the area that makes the most amount of sense. It doesn't have to bounce off the gap. Just look at the new lower lows, right? So look at your previous support. Look at what happens beneath that low. And then if it reclaims that low, you can potentially take a size. Like this little flag here could have been a really nice size in opportunity for sell H calls. And people try to front run and speculate that this low is going to be purchased up down here, which it did, and it was. But like, you can't front run stuff like that. But yeah, I mean, a size in over here. I have some Cell H commons. I'm actually a little bit red on those ones, but that's about like the only commons trade I'm red on. Um, so I guess I'll see what. Oh, well, I've been re-adding Oxy, and I'm very interested in the Oxy report as well, guys. This is also going to be basically like leading into knowing who the president is, leading into the what's it called? Uh, FOMC. If we could get both of those out of the way and then into the Oxy report, where it's at on the weekly, I'm going to be all over Oxy. This is going to be a big trade of mine. There's going to be a lot of big trades of mine where I'm putting a lot of money where my mouth is, right? And I haven't done that in like 2, 3 weeks. And I'm glad I haven't because the market sucked, but I'm preparing. This has been more of a time in this little window here for me to prepare for the end of the year rather than to prepare for shitty little charts that aren't going anywhere or aren't even worth my attention or my capital. So, yeah. Um, That'll probably be it for today. I'm gonna make the video now. I'm gonna do a educational video here soon. There ain't really nothing I really like too much. Like I said, it's more and less just preparation for positions after we get this stuff out of the way, where the market's in such a high level of uncertainty, guys. You do got to remember, everything is very uncertain right now. I have a clean, strong thesis for myself and where the market has been going. Have I been correct? Yes, I have been. However, am I going to be guaranteed right? No. Nobody's guaranteed right now. Nobody knows shit about frick what's happening right now in the market and where the market's going to be headed for the next like 2 weeks or so. Um, so this don't treat this like any sort of, strong seasonal flow, blow off top, end of year, Santa rally type of thing. This is not the case. It's an election. And maybe I'm getting the election too caught up in my mind, and it's just going to be general basic market behavior. And maybe I'm correct right now about this chart looking like shit. And then we're going to break down out of this inside bar. We're going to go test the signature print. We're going to go test the dark pool print. And we're going to collect liquidity there and then go for the blow off the top. I could be truly 100% accurate, but I'm not going to say that. I'm not going to claim I am yet. I mean, I'm a little uncertain as well. So, yeah. I made my money where my thesis was, where my eyes were, and that's all that matters. If you make your money where your focus has been, where you've been sitting on a chart, sitting and sitting and sitting and waiting and waiting and waiting and rolling and taking good opportunity in every little spot that you can, then these charts, like QQQ long, QQQ short, crowd long, um, slight little intraday trades, buying into BA after a loss just to, because the chart's so clean, I can't ignore these. And I mean, if you're doing that and you're valuing your risk to reward and you're keeping it in check of at least a 2-to-1, then you should at least be surviving. If you're break even within the last 3 weeks, don't look down on that. Everyone kills it on Twitter. Like, I've been not making a ton of money, and I would say I'm pretty good at what I do, and there's not been a high amount of opportunity. So don't get too down on yourself if you guys are going break even or going slight red. Maybe you're just doing a little bit too much right now. It's not that you don't know enough about the market or anything. It's just there's not been enough opportunity. Aside from a few tech shorts, a few tech longs, tech longs on an intraday basis, not on anything else. Have fun trading this Tesla premium. The Tesla short off of the sweep of the previous high was also a really nice little trade there. If you're catching it on this like opening print at 270, which is a 270 psych, there was also a big sell wall there where sellers got a bit aggressive. And this was a very clear breakout failure sequence here. If you're looking at the 15-minute guys, the orb was actually right off of the previous swing high, and we already had a little bit of resistance in the pre-market, so you could technically take the pre-market high. Once it fails that pre-market high, risk the wick right there on that 15. Take the lower high entries beneath the level at 271, which is your previous swing high. Start targeting into where the draw could potentially be to. I actually wanted to take this trade, but I wanted to keep my volume of trading relatively low throughout this whole window, so I never got a clear, true entry that I wanted to see. But I mean, yeah, this was all just really nice opportunity um, for basically a multi-day move. People don't understand that things need to pull back into candles, into gaps like this. And I'm sure so many people got screwed on this 1, 2, 3, 4, 5 day pullback. But that could be building out also a really nice peg. So Tesla's also going to be one that I'm going to have on the focus. There's so many names to focus right now. So that basket will definitely be dialed down a bit. We have FSLR, we have Solar, we have Tesla, we have the risk off and the risk on rotation on the table right now. We have Roku at a markdown into a gap. That makes a lot of sense into these gaps that have been filled. I don't know why I have this level here. That might be a little old, but yeah, I don't know. We'll see. We'll see where things kind of get going here, because we don't know if the market's going to go risk on, risk off. We have Oxy potentially as a focus after the report. The focus for me is really scattered right now. So once I find the true strong bid in wherever it may go to, that's where my focus will be. I feel like there's going to be a clear strong rotation for December, but that's just a waiting game. So I don't know. We'll see. But I'm going to get going. I'm going to end the recording now, and I will be uploading this. If anyone has any questions, please feel free to ask. I'm not going to be too active throughout this week, obviously, because of FOMC, as well as uh, the election, right? Probably the biggest week I've ever seen in the market ever. Um, so I think every little area of the market's a little uncertain right now. Um, so I don't know. We'll see. But you guys have a good weekend, and I'll talk to you after we see who's president.